Good afternoon, Elizabeth. Good afternoon, Bahamas. It is so great to be back with you guys. So, today we are just going to be touching on the way ahead for us for this year, as well as we are going to be refreshing for the candlestick formation. So, we're only going to go until 2:30 today. Firstly, I want to let you guys know that the time for the Forex classes, because of course we are still having meetings and we are still establishing the Coalition of Independents. I'm not sure if you know, but we are also planning out the constituency branch elections for each of the constituencies. So Elizabeth, you have some great news that is going to be coming up very soon. So stay tuned for that as well. So that being said, for the Forex lessons, the best day I have realized to host it is Sundays. So what I'm going to start doing is hosting it on Sundays from 1:30 to 2:30 so that we could still trade or set up our trades on the day that the markets reopen. Now, to touch on a bit of what happened last year. So as you could see, the US dollar has been going down for a little bit for recently. So that being said, USD pairs right now would be the best pairs to trade. So I definitely recommend that you guys look at the USD pairs, and we are also going to touch on some of that today. Today we are going to go a little bit more into routines and helping you guys to get set up with knowing which pairs to trade, and how to really establish your trading routine. Because listen, unless you create a routine, you won't do it. Just like with anything else that you want to learn, just like with anything else that you want to do, unless you are consistent with it, it won't work. So today we are going to be focusing on consistency. We are going to be focusing on getting you set up with the strategies again, and we are going to be focusing on the way ahead. So that being said, before we get too deep into anything, please share this. Thank you guys so much for joining. Really looking forward to getting restarted with you guys in this new year. I hope that everyone is good. Feel free to say hello and where you're tuning in from. Thank you guys so much for joining us. And please take a minute once again to share. All right, so of course this is recorded, which means that you can go back and watch it. You can share it with your friends so they can go back and watch it. I am going to share this live after it is finished as well, so that everyone would be able to get a chance to come back on and see what the way forward for the Forex lessons will be. All right, now that being said, we have, like I said, you could see so many things that has been going on inside of not only this country but the world. So we've had major hits going to the US dollar. So I'm just going to show you guys the charts right quick. All right, so as you can see, this is GBP USD. Now, initially, GBP USD was moving in an overall upward direction, which means that in this currency pair, you would be looking to actually buy, but recently it was going down. And we are going to be touching on next week why this happens, why the market moves in waves, and how to actually trade those waves, how to identify what we call trends. So this is in an upward trend. And you guys would have covered from last year the candlestick formation so that you could see where is the best place to enter. So if we just take a quick look at this area right here, you can see that this is what we call a retracement, when the market is moving temporarily in the opposite direction. And you could see this candlestick formation would be called a bullish engulfing candle. And this is an indication that the market is going to start going up. Now, of course, this is a completely new day for the markets. It's going to be opening up at 5 p.m. today, so you want to make sure that you pay attention to what the market does when it opens. You don't want to enter for a trade now. So this is what would have happened on Friday. I'm on the 1 hour chart for GBP USD. Feel free to sign on to smarttrader.com and follow along. So using this, again, you can see the market went up a little bit. I'm expecting that when the market opens, it's going to open up higher, because if you didn't get to see how currency pairs worked from last year, how a currency pair works is when the currency in the front is what we call the base currency, and the currency in the back is what that currency is being compared to. So with this market, it's actually showing you the movement of the Great British Pound. That's what GBP stands for, compared to the US dollar. That's what USD stands for. So whenever the Great British Pound itself increases in value, you're going to see the market going up. So whatever happens to the currency in the front will be directly shown on the market. Whatever happens to the currency on the back, the opposite will be shown. So GBP increases in value, the markets will increase. GBP decreases in value, the markets will start to decrease. Now, if the US dollar increases in value, the opposite movement will happen. So the GBP USD pair would start to decrease in value if the US dollar value starts to rise. If the US dollar starts to fall, it's going to cause the markets to rise or increase. So that being said, that's how currency pairs work. Just touching on it to once again refresh you guys. So also feel free to ask your questions throughout. I do my best to make sure that I can answer the questions as they come. Now back to the candlestick formations. So normally, once you see a candlestick formation form, now this can be one of two candlestick formations, and we're going to touch on them in just a second. But whenever you see a candlestick formation form, you want to buy. So if the market is going up, you want to buy on the opening of the next candle. Set a stop loss for a buy that would be 10 pips below the lowest point in that candlestick formation, and I'll show you how to do all of this by the end. And you want to set your take profit 2 to 3 times the amount that you are risking. I definitely recommend that you guys start off with a demo account, so you can go right to smarttrader.com as you see it on my screen, smarttrader.com, and you would be able to open up a demo account in SmartTrader and start trading for free. So again, this is for practice. Once you have mastered your trading, which means that once you can earn more than you lose, because of course there will be a loss at some point, what we are teaching you is to gain more times than you lose. So that being said, all you need to do is use the strategies. If you don't learn how to read the markets, then basically you are setting yourself up to fail. But once you learn the strategies, once you learn how to read the markets, then you are going to be doing exactly what the bank does. The bank takes your money, trades it so that they can have a profit, and gives you 0.01% of that profit. So that's that interest that you see on your bank account at the end of every year, 0.01%. So with these trades that you are trading, you get to have 100% of your profits. All right. So all of that being established, let's get started. All right, so once again, to refresh, we have some basic trading terms that we are going to be going over. So these terms are terms that are common to all markets. So whether you are trading options, Forex, stocks, etc., you will actually be able to hear these terms and use these terms in each market. So to understand the market, you must first understand the jargon or the terms that's used with each of these markets. All right, so firstly, we have the bulls. When you are trading, you will either buy or sell a currency. So you may have heard me mention earlier with the markets, because this market is moving in an overall upward direction, you would be looking for a place to enter where you can buy. So in this market, you would be looking to buy, and it's really easy. Now, right now, the markets are closed because the markets open on Sunday at 5 p.m. But when the market is open, then you'll be able to buy or sell. Feel free to let me know if you guys think that we should host these sessions on Mondays instead, because the market will be open on Mondays. But if so, it would be Monday evenings from 8 p.m. So feel free to comment and let me know what your preference is. Sundays, 1 p.m. to 2 p.m. or Mondays, 8 p.m. to 9 p.m. All right, so because you are looking to either buy or sell a currency in the Forex market, you would be called a buyer if you were buying, or a seller if you were selling. But not to get ahead, buyers are called bulls. They expect for the price of the market to rise after they buy. A bullish market is when the market's value is increasing. So bears. Sellers are also called bears. They expect for the market's value to lower after they sell. A bearish market is when the market is moving in an overall downward direction or decreasing. So what are Japanese candlesticks? If you noticed when we were looking at the charts, I've heard, as I was teaching persons, I've heard them call them some squiggly lines, or just a number of different things. But these are what we call Japanese candlesticks. Each of these red and green lines, they represent something. So it's called a Japanese candlestick because, of course, Japanese candlesticks, they have a body, they have a wick to the top, and they have a tail to the bottom. So in the same way, in this market, you actually have a type of candle formation called Japanese candlesticks. So that's all it represents. Each of these are called candlesticks. Each part of the candle shows the trader how to read the market. The candles form patterns that shows the trader when and where to enter a trade. So parts of a candle, you may have just heard me reference the wick, the tail, and the body. Those are the three parts of a candle that will actually show you where the market is going to go. So it's important to pay attention to how each candle forms. So the wick and tail can also be called a shadow. In the UK, they often refer to the thin line to the top of that candle and the thin line to the bottom of the candle as a shadow. So again, as I said, each of these parts, they have a purpose. The wick shows the highest price that the market has gone to. The tail shows the lowest price that the market has gone to. And the body shows the original price at the beginning of the time period, also called open, and the final price at the end of the time period, also called close. All right, so this is how a candle looks. It has a wick to the top, a tail to the bottom, and a body in the middle. So it's the thick part in the middle that's called a body, the thin part to the top that's called a wick, and the thin part to the bottom that's called a tail. And there are two types of candles, bullish candles and bearish candles. Bullish candles, which are usually green, show when the market is increasing in value. And the bearish candle, which is usually red, shows when the market has decreased in value. So this is essentially how a bullish candle will look, except for the arrow. So Again, each part of that candle has a purpose. You have the wick to the top, the thin line to the top that shows you the highest price that the market went to within a specific amount of time. So on this chart here, I'm actually on the 1 hour time frame, as you can see to the top. So these candles actually represents 1 hour each. So within the square, you have one red candle and you have one green candle. So we're going to focus on the green candle. This is a bullish candle. So the thin line to the top, this is called a wick. The thick line in the center, this is called the body. And the thin line to the bottom, this is called the tail. So the wick shows you the highest price that the market went to within that hour before the hour ended. After that, you have what is called the close price, which is where the top of the body is, the open price, which is where the bottom of the body is, and the lowest price, so which is the tail. The tail shows you the lowest price that that market went to within that allotted amount of time. So whether it's an hour, whether it's 15 minutes, whether it's 10 minutes, however long, whichever chart or time frame that you go on, you will be able to identify the highest price and the lowest price by looking at the wick and the tail and where the price was when that hour began or that time frame began based on looking at the bottom of that candle, and where the price was when that hour ended by looking at the close. So going back to the charts, we could look at the green candle again. So again, the wick shows the highest price the market went to within the hour. The top of this body here shows where the price was when the hour ended. The bottom of the body here shows where the price was when the hour began. And the tail to the bottom here shows the lowest price that the market went to within that time frame. So you could see by looking at this information here, if you click on a candle on smarttrader.com, then it'll show you all of the information for that, including the date and the time. So you could see this was January 14th, and that was at, 1 p.m. So it is showing you in a 24-hour time frame, which helps you to identify whether it's AM or PM. You could see that the price opened, so that's the top here, the open. It opened at 1.36548. And these numbers that you see here, these are called pips. So that's the numbers that are on the side of the screen over here. So it opened at 1.36543. The high, which is the top of the wick, it was 1.36722. The low, which is the bottom of the tail, it shows you it was at 1.36525. And the close, which is the bottom of the body, it was at 1.36698. So that's how you read a candle, and that's what a candle really shows you. But to use candlesticks as an indication of where to buy or where to sell, I'll go into that in just a moment. So to use them, that would be candlestick formations. Before we get to the candlestick formations, I just want to quickly touch on how to read a red candle, which is a bearish candle. So a bearish candle shows you when the market is moving in a downward direction. So the only thing that changes on a bearish candle is where the price opened and where the price closes, or where the price was when the hour began and where the price was when the hour ends. So if you are looking at the red candle on this side, the highest price would be to the top of the wick, lowest price would be to the bottom of the body, to the bottom of the tail. The open price would then be here. So this is where the price was when the hour began. The buyers bought, caused the market to move up, and then they formed that wick. The sellers came in, sold until the market was all the way to the bottom here. They caused this tail to form, and buyers came in at the last minute, bought until they caused the price to get here. So that's what's really happening with this market. You have buyers and sellers that are fighting to get, buyers want for the market to go up, so they're buying to get the price to increase. Sellers want for the market to go down, so they are going to sell to try to cause the market to decrease. So the open for a red candle is up here, and the close is to the bottom here. The open for a green candle is to the bottom here because, again, it's rising, and the close is to the top here. Again, feel free to ask any questions. You are absolutely welcome to. All right, so now to get straight into it, we are going to touch on the candlestick formations. All right, so candlestick formations, once again, they are patterns that are formed by Japanese candlesticks before the market changes direction. So they show you whether you should buy or whether you should sell. They are formed, by two basic types of candles: indecision, basically small body candles, and decision, basically full body candles. So you do have a number of indecision candles, but for today I'm going to skip past them because, again, I really only wanted this to be a 30-minute session so it could refresh, and then we could go on to how we would be moving forward. So once again, if you would like for these sessions to be on Mondays from 8 p.m. to 9 p.m., please do say so inside of the chat so that we can use that time, or Sundays from 1 p.m. to 2 p.m. You let me know. All right, so we're just going to skip through these. So that's the doji. It has a very thin body. The hanging man has a small body that forms to the bottom of the candle. The spinning tops have a small body that forms in the center of the candle. And now we have the decision candle. So it's really a full body candle, which means that the body is bigger than the wick and the tail. So now we can get into the formation. So you have the bullish formation. A bullish shooting star has a red full body candle on the left and a green small body candle on the right that forms to the top of the candle. So it has a small wick and a long tail. So normally I like to go into the market and show you guys how it forms, but again, for today, it's really just to refresh. So you can feel free to rewatch this session, pause it, take a look at it. Go to smarttrader.com, sign up for the demo account, which is free, so that you can start practicing using this. Once again, we already have a group that we put together for the Forex trading sessions, and we are really going to be setting some pip goals. I'm going to be sharing information with you guys inside of that group. Let me know if you want to be added. So that's going to include news. That's going to include whether, for example, I mentioned earlier, the US dollar is decreasing in value right now. So this would be a great time to trade USD pairs. All right, so getting back to the morning star. The morning star has a full body red candle on the left, small body candle. It doesn't matter if it's green or red. It's a small body candle in the center that has the small body closer to the top of the candle, a short wick, and a long tail. And then you have the green full body candle on the right. Now that green candle must close at least 60% above the previous red candle. So that's the morning star. Also, feel free to take some photos of these guys, take some screenshots, and you can keep these so that as you're looking at the charts, then you know what you're looking for. So there's the piercing line. The piercing line has a red full body candle on the left and a green full body candle on the right. Again, the green full body candle on the right must close at least 60% above that bearish candle. So this is the formation. Well, one of the formations that you can find within these two that I had identified earlier within GBP USD on the 1 hour time frame. So on January 14th, this is when that candlestick formation formed. So you have a red full body candle on the left and a green full body candle on the right. The green candle, as you can see, the close, which is the top of the body, is higher than 60% of that previous red candle. So this is again an indication that the market is about to go up. We're just going to touch on some more of the candlestick formations, and then I'll show you guys how to actually put in a trade using this strategy. Next, we have the tweezer bottom. So the wicks must cover at least 60% of the candles. Sorry, the tails. The tails must cover at least 60% of the candles. So the tails to the bottom are much longer than the bodies and the wicks. So that's what we call a tweezer bottom. Lastly, we have the engulfing candle. So the bullish engulfing candle must be larger than at least 1.5 of the previous bearish candle. That is one of the most common types of candlestick formations that you will find in the market when it's about to move in an upward direction. So all of those candlestick formations that you saw just now would form inside of a market like this, where the market is moving in an overall upward direction. So once again, we're going to be covering next week trends, waves, and how you'll be able to see that the market is moving in an overall upward direction. So you know whether it's a bullish market or a bearish market. So you know whether to buy or sell. All right, so that being said, let's get back to the lessons. So now we're going to go to the bearish formations, which is when you are looking to sell. So these are indications that the market is about to go in an overall downward direction. You have a green full body candle on the left and a red small body candle on the right, where the body forms closer to the bottom of the candle. So the wick is very long and the tail is short. This is a bearish shooting star. Again, I'm going to show you guys how to trade this by the end. So the evening star. The evening star must close below. The evening star, just like the morning star, the bullish morning star. So basically, once you learn either the bullish formations or the bearish formations, you can turn them upside down and you have the opposite. So the evening star has a green full body candle on the left, a small body candle in the center closer to the top of the candles, and a red full body candle on the right. So this red full body candle that's on the right must close below at least 60% of that bullish candle that's on the left, the green candle that's on the left. All right, so next you have the dark cloud cover. So it has the green full body on the left, red full body on the right, and that red candle must close below at least 60% of the previous bullish candle. Tweezer tops. The wicks must cover at least 60% of the candles, just like the tweezer bottoms, but opposite. And lastly, the engulfing candle. So basically, it's a large red candle that must cover at least 1.5 of the previous candles, previous bullish candles to be specific. So you would only look for these these bearish formations in a market that is moving in an overall downward direction. So now that we went through both bullish and bearish formations, I'm just going to show you guys how you would actually trade this. So we're going to use the bullish formation as an example because that is what I found earlier. So this was the, okay, 1 second. I just want to make it easier for you guys to see it. And there we go. So whenever you see sorry guys, I got a call. I'm just gonna wait for it to come back up. All right, there we go. So, right, once the market forms this bullish piercing line, then you would be able to buy on the opening of the next candle. So make sure you wait for the candles to close. And how it works is once the market gets to this point where that next candle starts, then you would buy here, and you can use what we call the measuring tool, which looks like 2 rulers on the left-hand side of the screen, and you can measure from where you would have bought or where you would have entered. Sorry, not from where you would have entered. You would measure from the bottom of the candlestick formation down 10 pips. So that you can set what we call a stop loss, so it prevents you from risking too much or from losing more than you're willing to risk. So your stop loss would be right here. So that's 10 pips below the lowest point in that candlestick formation at 1.36424. And your stop loss usually looks red. So this is how your stop loss would look. Now to get your take profit, you're going to measure from your entry point to your stop loss. And the reason why you're measuring is really just to see how many pips is in between. So that way you can find, number one, how much you're risking, and number two, how much you're looking to gain. So you can also do the calculations, but I've found that it's easier to do this, especially as a beginner, when you are using the measuring tool. So we are risking 27 pips, which means I always recommend as a beginner that you start off with getting 2 times the amount that you're risking. So let's just round that up to 28 and say that we are looking to get 56 pips as a profit. So next week, Sunday or Monday, you guys let me know. We are going to take a look at this right here to see whether this would have closed in profit or as a loss. Because again, we want to show you the practicality of these strategies that we're teaching you so you would be able to use them. So now we're going to measure from the entry point above, this is for your profit, until we get to 56 pips. So that's 1.37256. All right, there we go. And your take profit is usually going to be a dark green. So this is how your trade would look once you set it. So now you have your entry point, your stop loss, and your take profit based on the candlestick formation. So for you guys, instead of waiting on Sunday, we are going to officially start our first lesson, which would be the trend lines, on Monday, aka tomorrow, from 8 p.m. to 9 p.m. I'm going to make sure to share it with you guys and everyone can be aware. So for those that are inside of the trade group, we are officially going to be starting to trade together. And I might just bring some of you on. So feel free to join tomorrow at 8 p.m. because we are going to be moving together as a group. We're going to start off with our PIP goals. We're going to start off with what it is that we want to do within this year, what our goals are for. So if there's a business that you want to start, if you want to get a business license, whatever it is, you know what it is that you want to build up for. So all of this practice is going to go into making you a good or a master trader so that you can, number one, start investing, and number two, use these investments to start, whether it's your business, to start a school, to start, if it's going to college, whatever it is. If it is actually just being a full-time trader and making this your daily way of how you earn money, whatever it is. So let's do this together. And before I end, I just want to say, I know that these are some tough times, especially there are a lot of families that have reached out to us and have told us about what they are going through. They weren't able to get any gifts for their family members during Christmas, and that includes, of course, our families too, because so many people are going through so many things, and then with jobs requiring that you be vaccinated, there's so many things going on right now. But I want to give you guys a word of encouragement. I want you to know that even though it may be difficult right now, trust me, these are the times when you are going to build your character and really discover who you are. If you thought you knew who you were before, how you respond when it's difficult and when the challenge comes determines how you will respond in the future. How you respond when the challenge comes determines where you are going to go in the future. And if you keep on moving, you keep on going, you keep on just doing your absolute best and putting in what you have, then what you will find is in the end, it pays off. So I want you to know that I am praying for each of you guys. I actually pray for you guys every day, particularly for the Bahamas, for Bahamians. And we are in this together. There is nothing that can stop a united body. So please don't let the colors divide you. Don't let anything stop you from just working together. There is nothing that can hold you back so long as we do this together. There is strength in numbers. I look forward to seeing you guys tomorrow evening so that we can officially start our trading sessions. Once again, especially in this new year. And of course, all of this time that you guys have not seen me, we were working on establishing the Coalition of Independence as a party and making sure that everything is set up. So we have branch elections for each constituency. In order to participate, please ensure that you sign up for the membership. So to do that, you would just need to go to coalitionofindependence.com/become-a-member. So make sure that you sign up so you can be a part of history in setting up the constituency branches within your constituency. Southern Shores has officially set up their constituency. They've already had elections. They have already started. They're moving forward. So we are looking forward to moving with each of you in your respective constituencies. Have a blessed day. Be encouraged. I am praying with you guys, and let's do this. Have a blessed Sunday.